We've had ice cream. We've had the NFL. We've had the NBA. It is now time for Trading Nation. Social stocks getting crushed again today. Snap, Facebook, and Twitter all sinking in the last week. This is Facebook, tracks for its worst quarter in 6 years. Boris Schlossberg is with BK Asset Management, and Bill Baruch is with Blue Line Futures. Boris, why does Facebook stand out to you right here?
I like Facebook, but first I got to say I'm a baby boomer, so therefore I am unqualified to comment on Snap, so I'll just keep my comments to Twitter and Facebook. Facebook, I think, is sort of a jewel in the rough at this point, simply because the market is ignoring the massive potential of Instagram. Now, Facebook has obviously made all of its money through advertising, but if it can make the pivot to transactions, and most importantly, if it can make a pivot to shopping on Instagram and perhaps online gambling on Facebook itself, that could be a massive source of revenue, the market completely underpricing at this point. It's clearly a matter of execution, but they're moving towards that direction. I think they recognize the fact that advertising story is kind of done at this point, but because they have such an aggregation of eyeballs and such a very engaging experience, they can turn it into a more transactional product. And if they do, it becomes a whole new story as far as investment vehicles. So
you're betting on a second act from Facebook, basically?
Yes.
All right.
Yes, I am.
Bill, let's turn to you. Talk to us about what the technicals show you in Facebook and or Twitter.
Well, both charts do not look very pretty, but with Facebook, you can salvage another ugly week. Back it out a little bit. You take a look at the weekly chart. There's a trend line that starts at the very beginning of 2017, and it comes in here right against the low today, 161. So if you don't want to see it close below there, you also have the 100-week moving average that lines up right there. A close below there is going to open the door to accelerated selling. I see some minor support around 152, but the next real big level aligns multiple indicators at 139 to 142, and that's what you have to be careful about. But again, if you don't close below 161, it could salvage the week. And then with Twitter, that looks pretty ugly, and you don't want to see it close below that July low. It's already below there, and it looks like it could. It failed at the 100-day moving average. It's moving below the 200-day moving average. And really, I don't see this a buy until it hits about 27, and I think you could find some value down there. But you also have to look at the broader index. And the NASDAQ 100, it has a trend line dating back to April, and it's moved through that today, and the 50-day moving average comes in at 73.60. So you want to look for support at 73.60 in that index to keep this thing from falling.
All right, the killer bees. Bill, Boris, thank you. And for more Trading Nation, head to our website or follow us on Twitter. Why not? We just talked about it. You can follow us there at Trading Nation.
Position size and risk-reward ratio are two important aspects of building a winning trade. You don't want a single position to be too big a percentage of your tradable assets. Additionally, you want to make sure there is enough profit potential to justify the risk you're taking. Consistently constructing suitable trades and adhering to your exit plan can help you build on trading successes.